Imagine having investment wisdom so powerful it guided an emperor through the collapse of an entire empire and made him one of the wealthiest and most admired rulers in history. What if you could apply those same strategies right now in today's volatile markets? Marcus Aurelius, the Stoic philosopher and Roman emperor, mastered the art of investing in uncertain times. While Rome faced wars, political upheavals, and even deadly plagues, Marcus never panicked or made impulsive decisions. His wealth and empire thrived, even in chaos. So, what was his secret? And how can you harness it to protect and grow your investments today? Before I answer that, let's quickly examine something fascinating. Have you ever noticed how some investors remain calm and even profit during market crashes, while others lose fortunes overnight? How do the successful ones maintain clarity when everyone else is losing their minds? Marcus Aurelius knew the answer. His first investment rule was simple yet profound. You have power over your mind, not outside events. In other words, he understood that the market is unpredictable, always has been, always will be. But your reaction doesn't have to be. Think about the great financial crisis of 2008. Investors panicked and sold off valuable assets at massive losses. But Warren Buffett, a modern investor deeply aligned with Stoic principles, did the opposite. He famously invested billions when everyone else fled and emerged far wealthier. Now here's a critical question. How did Buffett know when everyone else was wrong? Because, like Marcus Aurelius, Buffett understood clearly what he could control, his decisions, reactions, and discipline, and what he couldn't, like market movements or global events. But simply staying calm isn't enough to master uncertain markets. Marcus Aurelius also emphasized another key rule: patience. He famously said, "Time is a sort of river of passing events, and strong is its current." He believed firmly that patience isn't passive waiting, it's strategic discipline. But how can strategic patience practically boost your portfolio today? Consider this real-world example. During the dot-com bubble burst, tech stocks crashed spectacularly. Investors who patiently held quality stocks, like Amazon, saw astonishing gains years later, turning modest investments into fortunes. Those who sold in panic missed life-changing profits. Now think honestly, how often have you impulsively jumped out of investments just before they skyrocketed again? Imagine the wealth you'd have today if you'd practiced Marcus's disciplined patience instead. But here's something even more powerful Marcus Aurelius taught. Look beneath the surface. Let not the quality of a thing, nor its worth, escape you. In investment terms, this means truly understanding the value of what you own, not its temporary market price. This rule transformed my own investing journey. I'm Saul, by the way, and once I learned to clearly separate short-term price fluctuations from long-term value, my returns skyrocketed. I stopped chasing quick gains and started building genuine wealth. You can too, and I'll show you exactly how in just a minute. But first, let's uncover Marcus Aurelius' next powerful rule for investing in uncertainty. Always anticipate setbacks. Marcus prepared mentally and financially for worst-case scenarios long before they happened. He called this negative visualization, and modern investors like billionaire Ray Dalio credit it directly for their massive success. Dalio, founder of the largest hedge fund in history, regularly visualizes market downturns. He doesn't fear them. Instead, he plans meticulously for each scenario. When markets inevitably crash, he calmly executes his prepared strategies, making fortunes while others panic. Ask yourself right now, are you financially and emotionally ready for the next market crash? Or will you panic like everyone else? If you apply Marcus's negative visualization strategy today, you'll not only survive the next downturn, you'll actually profit from it. But perhaps Marcus Aurelius' most powerful investment rule is the simplest: clarity above complexity. In his own words, do nothing randomly or without purpose. Think about how often complexity sabotages your financial decisions. How many confusing financial products, obscure market tips, or complicated strategies have you followed blindly? Marcus Aurelius understood deeply that complexity creates mistakes, anxiety, and poor decisions. He advocated simple, clearly understood principles you can confidently follow even in chaos. Investors like Warren Buffett echo this exact philosophy. They avoid what they don't fully understand, no matter how tempting or trendy it seems. But how exactly can you practically simplify your investment approach starting today and instantly improve your financial clarity and results? I'll show you that powerful strategy shortly. But first, here's a question you must consider carefully. What if the greatest investment risk isn't market volatility, but your own emotional reactions to it? Stick around, because next I'll reveal precisely how to conquer emotional risk and master uncertain markets with the exact clarity Marcus Aurelius used to build lasting wealth, even during Rome's darkest moments. Have you ever noticed that during a market crash, everyone knows they should buy low, yet very few actually do? Why is it that investors consistently act against their own best interests exactly when it matters most? Marcus Aurelius explained this perfectly thousands of years ago. If you are distressed by anything external, the pain is not due to the thing itself, but to your estimate of it. In simpler terms, your perception of market events matters far more than the events themselves. Think carefully. How often have headlines or market news pushed you into rushed decisions you later regretted? Marcus would argue your greatest risk as an investor isn't external volatility, it's internal emotional chaos. The good news, you have complete control over your emotional reactions. The Stoics understood that mastering your emotional reactions is crucial. But how exactly can you start applying this powerful idea to your investing immediately? Here's precisely how. Create what Marcus Aurelius called an inner fortress. This means clearly defining your core investing principles and refusing to deviate from them, no matter how chaotic things get. Let me explain exactly how that works in real life. Imagine you've carefully researched and invested in quality companies or index funds, confident in their long-term value. Now suddenly, panic sets in. Markets plunge, investors flee. This is exactly when your inner fortress protects you. It reminds you clearly why you invested in the first place. Because when you truly understand what you own, short-term chaos stops mattering. Let me give you a practical example. During the COVID-19 crash in early 2020, global markets plummeted almost overnight. Investors panicked. But those who maintained clarity, those who had their inner fortress, did something remarkable. They didn't sell off in fear. They confidently added to their positions, investing more precisely when others fled. What happened next? Markets rebounded at record speed, rewarding disciplined investors who followed Marcus Aurelius's Stoic wisdom with extraordinary gains. Now ask yourself honestly, do you currently have clearly defined principles guiding your investments, your own inner fortress? Or are you vulnerable to emotional reactions during market chaos? Building your inner fortress is surprisingly simple. Tonight, write down clearly exactly why you've chosen each investment. Keep it somewhere visible. When markets fluctuate, and they always will, this written clarity will instantly calm you, helping you remain rational and profitable even in uncertainty. But let's go even deeper. Marcus Aurelius also emphasized something many investors neglect: humility. He constantly reminded himself that he could be wrong. Humility made him careful, thoughtful, and strategic in decision-making. Why does this matter for you today? Because overconfidence is one of the most dangerous traps in investing. Just look at investors during cryptocurrency booms or speculative stock bubbles. They become convinced they're unstoppable, right until the moment everything collapses. Stoicism teaches that true investing strength is humble awareness of your own limits. Consider legendary investor Charlie Munger, Warren Buffett's partner. He openly credits humility as the cornerstone of his investing success. Munger famously avoids industries he doesn't deeply understand, no matter how enticing the profits look. This stoic humility helped Munger and Buffett build one of the largest fortunes in history. Imagine applying this humility yourself. Instead of chasing risky investments because they're popular, you confidently invest only in opportunities you genuinely grasp. How much safer and wealthier would your financial future become? But Marcus Aurelius didn't stop there. He also highlighted the critical importance of adaptability. The universe is change, he wrote, and life is opinion. The greatest investors understand this deeply. The world constantly evolves, and successful investing demands flexibility. Consider Apple's legendary turnaround under Steve Jobs. Investors who stubbornly clung to outdated views of the company missed massive opportunities. Those who adapted and recognized Apple's changing potential made fortunes. Now reflect honestly. Are your investments adaptable to change, or are you clinging to outdated views simply because changing feels uncomfortable? The Stoics teach that adaptability isn't about abandoning your principles. It's about intelligently adjusting to new information. Imagine if Marcus Aurelius had stubbornly refused to adapt to Rome's changing threats. His empire would have crumbled even faster. His adaptability saved Rome, just like yours could save and grow your wealth. Finally, let's uncover Marcus Aurelius' ultimate investing rule, one that brings everything together. Waste no more time arguing what a good man should be one. In investing terms, this means taking decisive, consistent action instead of endlessly analyzing or procrastinating. How many investment opportunities have you missed by hesitating, doubting yourself, or constantly waiting for the perfect moment? Marcus Aurelius understood clearly that perfection is an illusion, and that consistent action beats hesitation every time. Warren Buffett echoes this stoic wisdom. He often says successful investing doesn't require extraordinary intelligence. It requires disciplined action. Imagine yourself 1 year from today. Where would your wealth be if you simply committed to consistent, disciplined investing action, rather than endlessly second-guessing yourself? Now let me leave you with this powerful question. Are you ready to finally apply Marcus Aurelius's timeless investing wisdom to your own financial life? Will you build your inner fortress, practice strategic patience, humility, adaptability, and most importantly, decisive action? Because ultimately, investing in uncertain markets isn't about predicting the future. It's about mastering yourself first. Marcus Aurelius proved this philosophy 2,000 years ago. Warren Buffett proved it in modern markets, and now you have everything you need to prove it yourself. So the real question is, will you start today?